Lucy is a wealthy individual who owns a number of houses. Some of the houses were bought a long time ago and some have been recently built. Lucy rents out some of these houses on normal leases and occasionally sells houses in her property portfolio. What are the GST implications for Lucy? There are some special GST rules relating to the supply and rental of residential property. The legislation defines a residential premises as land or a building that is occupied or is intended and capable of being occupied for residential accommodation. Case law has found that items such as vacant land and a disused house to be used for development are not residential premises. The supply of residential premises for rent, sale and long-term lease are generally all input taxed activities and so are not taxable supplies. However, supply of residential premises that are new or commercial will potentially not be considered an input taxed activity. While the normal rental of new residential property is input taxed, the sale or long-term lease of new residential property is not an input taxed activity. Here, the definition of a long-term lease is at least 50 years. The legislation defines new residential premises as premises that have not been sold or subject to a long-term lease. New residential premises also include extensively renovated premises that have not, since their renovation, been sold or subject to a long-term lease. However, a residential property will no longer be regarded as new once it has been rented out as residential premises for 5 years. For Lucy, this will mean that all of her rental income is input taxed, as she has no new properties that are subject to long-term leases. However, the sale of her houses that she built or extensively renovated and have not afterwards been rented for 5 or more years will be subject to GST. The sale or lease of commercial residential premises is not universally input taxed. The definition of commercial residential premises includes accommodations such as hotels, motels, hostels and caravan parks. The sale of commercial residential premises is not input taxed and so will potentially be a taxable supply. Leases of such premises that are not regarded as long-term residential accommodation will also not be input taxed and so will potentially be subject to GST. In contrast, the lease of such premises that constitutes long-term residential accommodation is potentially input taxed. Long-term residential accommodation in this context means where the accommodation is provided for a continuous period of at least 28 days. The leasing out of commercial residential premises that constitutes long-term residential accommodation will be input taxed if the taxpayer elects this to be the case. However, the taxpayer can instead pay a reduced amount of GST and have an entitlement to full input tax credits on expenses relating to such rental income. In this case, the GST is calculated on 50% of the GST inclusive price of renting the accommodation. Note that the reduced GST option is only available for all long-term accommodation supplies if the commercial residential premises are predominantly for long-term accommodation. This requires that at least 70% of the individuals provided with accommodation in the premises are provided with long-term accommodation. However, where this 70% threshold is not fulfilled, then under this option, the first 27 days of long-term rental stay income will be treated as a full taxable supply. Rental income after this 27-day stay will be subject to GST at the reduced 50% rate. Assume that a hostel has 75% long-term and 25% short-term residents. The hostel owner has not elected to treat the supply of long-term accommodation as input taxed. The owner would usually charge $110 a day if full GST applied, being $100 plus $10 GST. In such an instance, they would pay GST on 50% of the GST inclusive price of $110. As a result, the owner would be likely to charge long-term residents $105.50, being the $100 value plus $5.50 of GST. Short-term residents would be charged full GST. Also, input tax credits could be claimed on all acquisitions relating to the property, as none of the supply is being treated as input taxed. To recap, while the sale and rent of residential premises is generally an input taxed activity, exceptions do apply. The sale and long-term lease of new residential accommodation and the sale of commercial residential premises is not regarded as input taxed. The GST treatment of leasing commercial residential accommodation will depend on whether it is short-term or long-term accommodation.